8:17 is your time now. We have all heard how the stock market is rallying lately, but where and how should you invest? Money Coach Bill Stanley is here with some good advice for us. Good morning.
Good morning. Yes, as a money coach, I cringe when I see the headline that Dow 14,000, the individual investor, is starting to get back in the stock market. This is the same individual investor who sold everything when the Dow was 6,500, doing it exactly wrong. What we need is a realistic and common sense approach to investing. Now, when do you invest? A, B, C.
Okay.
A, when you're sure you have more money coming in than you're spending. Now, this may sound
makes sense.
It does make sense, but a lot of couples and a lot of people do not know where their expenses are going, and they've got to find out what the expenses are and compare them.
You got to have the money before you can invest.
Exactly.
Right.
And B, you invest when you're able to pay off your credit card at the end of every month. You can't be investing and then still having debt on your credit card. And C, you have to have a substantial emergency fund to take care of things like losing your job or your car breaking down. Then you can invest. Now, how do you invest? Well, one of the best ways is to invest the same amount of money periodically, $100 at the beginning of the month or $200 per paycheck.
Figure out your budget and what you can afford.
And then increase it when you can. You buy more stock when it's low, and you buy fewer shares when it's high. It's called dollar cost averaging. It works. Don't buy one or two stocks. Buy the entire index, the Dow 500 or the S&P 500. It makes more sense to use a mutual fund or an exchange-traded fund to buy the entire thing. And be very careful. C, I would say, would be the importance in investing is the expenses that you pay. Never pay a commission on when you buy a mutual fund, and watch the annual fees very closely. And of course, you should come up with an investment plan, a written plan. And that may start off A, that you determine what percentage of stocks that you're going to be in your portfolio. I recommend no more than 50% nor any less than 20%. Put your other money in bonds or real estate or your small business or Picasso paintings or
There's lots of other ways too. Yes.
Exactly. And then B, I would rebalance annually. That means if your stock allocation goal is 50% and after a year it's 60%, well, then you're going to have to sell some to get it back down to 50%. And the other side is true too. If it's down to 40%, then you add stocks to get it back to 50%.
You got to watch it closely. You don't want to get caught up in all the hype. That's the bottom line.
Right. And C is that investing is a long-term deal. Don't watch the stock market daily or even weekly. Don't look at the interest rates, and don't look at the mortgage rates, and don't look at international and domestic events. Just keep your eye on your investment plan and the rebalance plan. And investing is mostly common sense, and it's your money, so you better educate yourself and get out there and do it.
You got that right. You have a website as well. It's moneycoachbill.org.
Exactly.
And you can contact Bill there as well. Great advice for us every week in our Money Matters segment. All right, Bill, thanks so much.
Okay.
We'll see you next time. Let's check the forecast now.